What's going on, you guys? This is gonna be a very different video for me. If you're new to this channel, a lot of my videos are about short-term rental and Airbnb investing. Today, I'm literally gonna do a completely free, in-depth training, uncut, unedited. So you guys wanna bear with me, but this is literally gonna be behind the scenes, see what it's looking like under the hood in terms of how to pick a market and how to evaluate a market for its tourism strength, and how to evaluate and pick a short-term rental and see if ultimately if it's even worth investing in. So I'm going to be reviewing how I source markets, how I look at AirDNA data. I'll do all screen record or screen sharing so you guys can see everything. I'll show you my investment template that I built and personally use and all my students use. And then we're literally going to go pick a market I've never looked at before. So it may be a good challenge. And then I'm going to do a full evaluation of that property. And ultimately, I'll review the criteria and I'll tell you guys if this is worth investing in or not. So without further ado, I'm going to start screen sharing and we're going to go right into it. All right, so I've never really looked into Michigan for myself. I know some of my students have, but I'm just going to do some general market research and I'm going to figure out one or two towns that are worth looking into. So I'm literally going to start super high level. You guys are going to think this is super boring, like this is obvious, but you still have to think of it like a funnel. We're going to start with top level market research and then get like really nitty gritty into the details as we go. So I'm going to look at top vacation destinations, Michigan, which I assume is a pretty seasonable market. Seasonal? 16 best places to visit in Michigan, according to locals. National Park. Okay, this is definitely not going to help me. All right, this is U.S. News. Sleeping Bear Dunes. Pictured Rocks. Mackinac Island. Traverse City. I've heard of Traverse City. I think my wife and I may have stopped in Traverse City in our van trip, but I've never looked at a deal there. Grand Rapids. I know Traverse City is a good vacation market. I think it's on one of the Great Lakes. 15,000 residents. Cool. All right. Foodie Hub. Awe-inspiring curb appeal. They have Traverse City Film Festival. All right, wine and brewery scene. Okay, first thing I like to do is go to AirDNA. Guess I should have logged in before making this video. Now that we're in, I'm going to start with the market research, reset all my filters. All right, Traverse City. All right, so this one has two submarkets, meaning there's two probably zip codes or two, sometimes they'll define it as parts of town. Like if you look at Nashville, they'll have zip codes. They'll also have all these different like neighborhoods, if you will. I always start at the market as a whole. A lot of people like to chew into this information right out of the gate. I think that's a waste of time. I used to look at this all the time. I get into that information later on, but what I want to do is go to all of the listings and sort by revenue. So before I even start diving into Zillow, seeing what's out there, I just want to see like what is the potential, of varying size properties. So you can see there's a couple there's one like a hotel up here, 7 bed, 8 bed, 16 bed, 5 bed, 9 bed, so on and so forth. But what I'm looking at is the revenue potential. So as you can see, there's many properties over 200K a year, which is intriguing. And as you get down, you can kind of see mid 100s. So there's a lot of good comps. So I think it's worth evaluating further. Now here's the kicker. One of my good buddies, John Bianchi, uses this method, and it's really helped me over the past year or so. Instead of going into a full-blown investment analysis, first we want to do back-of-the-napkin math. If I'm self-managing a property, minimum threshold is 15% of projected gross rental income to purchase price ratio. So what that means is let's say I'm looking for 4-bedroom properties. If I go to filters and I filter to only 4-bedroom, hit apply. What I'm looking at is I need a list of good comps. So I need to weed out all the bad data. Bad data could be lack of reviews, no reviews in the past 3 months, You know, if there's one or two outliers that say like 250K a year and the rest are doing like 125 or under, just take those out because they don't justify, you know, a good data set to base a forecast off of. So what I'm looking for is, let's say 4 bedrooms, there's a good range. You can see all these, you know, 152, 149, in that 130, 125-ish to maybe like 150. So let's say that's my range. So if I'm doing math, I could do it on my computer so you guys can see. What I'll do is I'll say at a minimum 125 divided by 0.15, so it's 15%. The max purchase price I would go for a 4-bedroom and using that target would be $833,333. Ideally, I want a 20% rental income to purchase price ratio, meaning the max purchase price on a 4-bedroom would be about $625. So that's my range. So when I go to Zillow, I can set my filters and I can filter out all the crap that's out there. Now, maybe you go a little bit above 833 because you are looking for some negotiation room. So maybe you start at 900 and then you know what your max offer is. If I can figure out a property that will hit those numbers, then when I go to my investment analysis later in this video, you guys are going to see that those numbers usually pencil really, really well, and your cash on cash return is going to be within your target of, let's say, 15 to 20% cash on cash. I always target 20% cash on cash or higher for my baseline forecast, and then I'll do a low and a high to make sure I'm really comfortable, high conviction in the investment. All right, so what I need to do next is see where these are located on a map. AirDNA is coming out with a draw on the map feature. They have it for the enterprise version, which I also have, but I'm not showing it on this demo. When they come out with that, it'll be really helpful to draw a circle around where your target properties are that you find on Zillow to only look at the data that are really close. Now, one thing I'm going to note here is when I'm looking at these comps, you need to understand, you know, let's say we have find a property. Let's just find one. I'll give you guys an example. Traverse City, Michigan. Okay. So let's say I'm looking at a property that's not lakefront and all of the top properties are lakefront, or at least most of them are. I cannot justify one of the lakefront properties as a comp for my non-lakefront property. Now, there might be a chance that I can compete if I go crazy with all the amenities and stuff and maybe have a pool and all these, you know, fun things for families that are worth paying for. But lakefront, oceanfront, you know, mountain views, people pay for that. So that would not be good data. So what you need to do is filter out those properties and only look at a subset of properties that makes sense to justify evaluating a property further. All right, so if I do notice there are several that are lakefront, so that's what I'm going to target first. And let's see, there's this one that looks super nice. This is actually on a smaller lake down here, which is interesting. I wonder if I can see what lake this is. Doesn't tell me. State Forest. All right, so there's one we could look at. There's another one doing 186. This is also on that lake down there. I wonder if that's the same property. It almost looks like it. It's hard to tell. I don't think it is. All right, and then there's another one doing 163. AirDNA says revenue potential 205, also down there. So interestingly enough, if I were to just blindly look at Traverse City, I would think invest in the city or right on the water. But so far, all these properties are down on this other lake down here, which is super interesting. They're literally all down here. So I'm looking here, I'm not even gonna focus my search up here. And what I'm actually gonna do is on Zillow, remember my price max, I'm gonna set as, let's say I'm targeting a 4-bedroom. I'm gonna say max, maybe I'll do like, crap. Let's say max, I'm gonna do 925,000. Minimum, I'll just put like 500K because there's probably nothing worth it under there. For sale, and I need 4 bedrooms. All right, and let's go zoom in down here. There's 2 available properties. One here, and let's see if this one's lakefront or not. So one is lakefront, one is not. So this is the property that I'm going to evaluate. Now, I'll mention this now once and for all because there's not enough time in this video to really go into full depth on regulation and STR permits. What I will say is I would Google Traverse City or insert local town name, wherever this property is located in, STR permit or vacation rental permit process until I can figure out the information on a website that will tell me if I'm allowed to even short-term rental in the first place. Does it have to be a homestead or not, meaning it's my primary residence? Or am I allowed to apply for a permit and manage it remotely and not have to worry about it? If there's no information online, work with the local realtor and then call the city zoning office to get information. For the sake of the speed of this video, we're going to assume that I can short-term rent this property. Just full disclosure, I did not do this research here. There's already been a price cut of $25K, so that tells me that they're looking to get rid of it, and they probably have not had too many offers yet. I love that it already has a dock. Looks like it needs a little bit of work. It is lakefront, that's big time. It has a deck. It has this little viewing area, which could be turned into something super cool. Whenever I'm looking at properties, I'm not looking at the current condition. I'm looking at what it could be turned into. Does it have the bones that I could buy it at a sub $1 million purchase price and turn it into something that might be able to rent for like a $2 million, $3 million property or something like that? So if it's purely cosmetic upgrades, it's usually a green light for me. So this could be new paint, new floors, new light fixtures. I'm not usually looking for like a complete rehab down to the studs. Now I will rehab bathrooms. I have done that before if necessary. These may just need a little bit of paint, new vanity, new light fixture, new mirror. But what I'm thinking about when looking at a property is what are my first like 5 to 10 photos going to be? So I'm understanding as a traveler what is going to capture my attention to click and want to learn more about the listing and see what's worth paying for it, right? And so for me, it's all going to be about this exterior and dock area. So sunset photos, fire pit, hot tub. What other outdoor games can I put out there? Can I do a grill station or an outdoor kitchen? All right, so $850. So that would be pretty close to the top purchase price of $833 that we came up with earlier. All right, so what I want to do is zoom in even further and see if I can find a couple 4-bedroom comps that are really close to this property. So this one is right here on Spider Lake. This is Forest Lakes, but it should be the same one. Yes. All right, 91, 54, 33, 142. So this might be a good comp here. It's got a dock, lakefront, pretty terrible interior and design, which is something I want to look at. Like missed opportunity. It's just like terrible fire pit. Not staged well. Photos aren't the best, but they're not terrible. Like there's no theme, there's no staging. This looks like grandma's house that they just threw up on Airbnb. So this is good. If this property is able to do $142K a year, that gives me every bit of confidence that I will be able to at least do the same amount, if not outperform them. So this would be one of my comps. Now what you want to do is find like 3 to 5 of these similar comps that are in the same area that are also 4 bedrooms, and then double check the reviews. You can see there's been as recent as 2 weeks ago, February, and then a bunch from last year. And then I want to check their calendar, see how much they're booked up. They got almost every weekend in May is booked, a bunch of weekdays, and then almost their entire summer is booked. And they're doing 7-night minimums Friday to Friday, $850 a night. So they're renting quite strong, and it's a poo-poo listing. It's only renting because it's lakefront. All right, so I'm pretty intrigued about this property now. So once you have a good list of comps, I would encourage you to put them in a spreadsheet. So what I would normally do is actually put them here with the Airbnb link, the estimated revenue, and then highlight all the amenity or features. We actually have a whole nother spreadsheet for this called creating a buy box, which we go really in depth on understanding all the top properties, what are the common amenities they have, common themes, and then we make a list of those that are non-negotiables, must-have. For example, like a hot tub, if it's like a mountain or lake property, would be a non-negotiable. And then I make a list of the over-the-top amenities that very few, if anybody, has, and that's going to set me apart from all the properties in that market and help me out-compete all of them, not just this year, but for years to come. All right, so what we're gonna do now is do an investment analysis. You guys can use strhub.co. It's a place where you can evaluate properties for free. You can create a spreadsheet. This is the one I give to all my students and use personally. So let's say my max purchase price I'm willing to offer them, let's just round it down to 830. Let's say that's what I'll offer. I'm assuming 20% down. You know, you might be able to put 10 or 15% down depending on the loan product, but let's just do this for the sake of the example. Let's say closing costs, I'm gonna negotiate and get them to pay for maybe 2% of my closing costs. I'm only gonna forecast 2. Appraisal gap, none. Estimated rehab. So let's go back here. We'll do just a quick analysis of what I think we're gonna need to spend on rehab. I would definitely take your time with understanding like what the square footage is, the cost per square foot for labor and materials on flooring and paint and those types of things. You could just do some quick research. Just off the top of my head, I already know I'm gonna replace the light fixtures. I'm gonna paint any walls that are drywall. I'm going to redo the floors, and I'll probably redo a vanity or two, and then I'm gonna completely refurnish it. And then the exterior, until I get the inspection report back, it's hard to tell. It looks like it's in okay shape. All right, so I'm just gonna budget. I'm gonna budget like 60,000 for rehab. I know some of you are like, oh my gosh, that's crazy, but I've noticed the more I spend in a property getting it into the condition I want it to be to rent, especially in terms of design and amenities, it rents incredibly well. So design, if outsourced, like let's say you're working with someone like Somerled Designs, you would wanna book a meeting with them, get an understanding of their pricing. Let's just assume I outsource and this is like, I don't know, 12,000. I'm just making up a number. What's the square footage? 2,100 square feet. So that's probably a fair estimate for like a remote design package, maybe 10 to 15K, somewhere in there. It's 4 bedrooms. How many other spaces do we have here? Probably 1 or 2 common areas within the house. Yeah, 2 common areas. So I'll usually budget 7,500 to 10,000 per room, per bedrooms, and then at common spaces an additional maybe 5K. So let's assume this is 2 common spaces. Let's do 3 because we have the exterior and the dock actually. So about $57,000 for furniture. I know some of you are like, oh my gosh, that's crazy. Trust me, it's worth spending the money where it matters. And in this case, it'd be design and furniture. So all in, just shy of $300,000. Is the investment worth it? We're about to find out. So what we do next is create our best estimate forecast. And then what we'll do is do a high and a low to stress test the investment. Basically what my goal is here is the best estimate needs to be the forecast I have the highest conviction in, but I want to see what my upside is. I want my best guess to be about 20% cash on cash return, and I want my target for high to be 30+%, and my low, meaning I would have to be doing really bad in order to hit this annual revenue. For the low forecast, I want to be like 7 to 10%, so I'm competitive with something like the stock market, mutual fund, so on and so forth. And that's just cash on cash return, meaning it's the total cash flow output divided by the total dollars invested. In this case, would be around 300,000. All right, then we'll review total return on investment, which talks about principal pay down on the loan, appreciation, and all that good stuff. All right, so I assume we're gonna try and target 125 to 150 total revenue. Now that's gross revenue, that includes the cleaning fees charged to the guests. So anytime you look on AirDNA historical data, that includes the cleaning fee. You can forecast cleaning fee and expenses as you see here, but I actually like to strip that out and not forecast it. The reason is it's impossible to predict the exact number of cleans you're gonna have. So if I don't forecast it, I'm just doing pure daily rate and then all my other operating expenses, I should be in good shape. All right, so we're gonna go back to AirDNA and I'm going to, so 142, so like that's the range, 125 to 142. Come back to market performance, you can get an idea of the occupancy and then the daily rate by price tier. And my ultimate goal is to compete on the upper echelon of price tier. So that would be upscale to luxury. And as you can see, during the summer months, upscale $740 to like $1,500 a night. And we just pulled up our first comp and they were charging mid 800s a night during the summer for a 7-day minimum night stay. So they're crushing it during the summertime. The winter though drops off quite a bit. It's about 50% of what they're charging during the summer. So we're trying to come up with a good average here. And then occupancy rate, where are you? Here we go. All right, occupancy, you can see it's very low. 20 to 30% during the winter, very high during the summertime. All right, so in a really seasonal market, I'm more focused on the revenue total versus really nailing my forecast daily rate and occupancy. And in some cases, I'll create two forecasts, a busy season forecast and then a low season forecast, occupancy rate and daily rate for busy season, and same for slow season, and I'll add the two together to get my total. But I'm going to assume that I'm going to be able to get 145 less the cleaning fees. And cleaning fees are usually like 10 to max 20% of your revenue that you collect. So let's assume it's 145. You know, we'd have about 21,000 to 29,000 in cleaning fees. So let's just say it's like 24,000 in cleaning fees. So that would be 2,000 a month. So 2,000 a month, 24,000. So 145 total annual revenue minus 24,000, 121K. So ultimately, my best guess, let's just assume we're at like 600 a night at like 55-ish%. That would get us to right around 120. Okay, so this is a pretty fair forecast. That's honestly just doing this in the quick example in this video. That's what I would conclude at. And then low and high we're going to come back to, but first we need to forecast our monthly operating expenses. So what I like to do is just go to the Zillow listing and try to get a good estimate for the taxes. So, just scroll down on here and you got property taxes at 44.70. No, let's come down here to the forecast. Property taxes $620 a month. So you can put that here in OpEx. Insurance, it's lakefront, and we're going to want to have commercial liability insurance, so we're going to bump this up. Let's say that's like $450 a month. HOA, none. All right, and then I usually just do a best guess for utility bills. You can come in here and see like what appliances run on what utility to get a better understanding, but usually it all comes about to pretty close. Let's just say it's like 125 for water. Let's say gas is like 200 a month, and then electric, another 200. Wi-Fi is usually like 125 a month. And then CapEx, we'll probably have this be let's just say this is like, I usually do like 0.5% to 1% of the purchase price. It's probably on the higher end, but let's just assume it's like $400 a month. CapEx is basically like saving for new roof, HVAC, capital expenditures being big expenses that happen every so often that you have to replace over the lifetime you own the property. So of course, these aren't a normal monthly expense, but we budget for them. So when we do have the big expense, we have the money to then pay for it. Incidental, so if you're providing soap, coffee, toilet paper, etc., let's just say that's like $100 a month. Cleaning fees, remember I'm putting 0 here because I'm not forecasting it as revenue, so I'm not going to forecast it as an operating expense. General maintenance, so if you have pest, random repairs, pool, hot tub, whatever it is, you want to make sure you put that in here. And whatever you do, add an extra like 25% to it because there's always something random that comes up with an Airbnb. Let's assume maintenance is like $250 a month. And then you're going to have, I just put in guest reviews or hospitable. Those are the two most popular ones from what my students work with. Probably about like $25 to $50 a month per listing. Let's assume it's like somewhere in the middle, like 35 bucks a month. Price Labs, about 25 bucks a month for one property. If there is a permit, I would also include that in here. Let's assume there's not, so I'll leave that at 0. And if you're outsourcing management, you would put in the management fee here. So from here, the service fee, the only caveat here is this is going to adjust based on your estimate. But let's just assume this is times. All right. Principal interest in PMI, you can build this into your spreadsheet, or you can just use strhub.co, or come over here. I think we said 830. Assuming 20% down, let's assume interest rates like 7.5%. Hit update. I'm not caring about this right now. All I want is principal and interest. So 4642, we'll round up. Let's put in the exact amount. We'll just paste that in here. All right. All right, so remember, I did not do the low or the high yet. So right now we're just looking at the cash flow best estimate. And remember what I said before, this deal's probably gonna pencil, assuming all this is accurate, but just looking at comps and then looking at the purchase price. So right now, it's showing that we'll have an annual cash flow of almost 31,000 bucks and monthly of 2,563. Obviously, this is gonna be way higher during the summertime and way lower, maybe flat or negative during some months during the winter. And we see it's only projecting a 10% cash on cash return. So in this case, I probably would not proceed with the deal unless I got it for a lesser purchase price, or I went back into comps and then had a 100% justification that I could, achieve better rental results than that other property. So just to finish the example, I want to look at a low and a high forecast. So let's say based on my comp list or based on AirDNA data, I would justify that my average daily rate could actually be closer to like $650 a night, and I think I can get my occupancy closer to like 65%. So 154, let's say, is the high. And on the low, let's say this was like 500 a night at 50%, so like 91. So that would basically be break even. You guys can see on the low forecast right here, we're just looking at cash on cash would be almost 0%. Cash flow would be literally 130 bucks a month. That's literally break even almost. And then on the high side would be 21%. So this deal would not meet my criteria, but this is a great example of sometimes it seems like it's gonna be a good deal at first sight, and then you run through the numbers ultimately to understand that this is gonna be one of the ones you funnel out. So this is only one step closer to finding a really good deal, in my opinion. And then just to finish up this example, to explain how this spreadsheet works, I'm also gonna look at total ROI, but I always base my investments on cash flow. So if the cash on cash doesn't pan out, unless it's a major equity grab through some big rehab and it'll be crazy, then I'm probably not gonna proceed with it. So if you did not rehab the property, you would put the same purchase price here. So let's assume in this case, like none of the rehab we did was like value add to it. So the after repair value would be the exact same. It would just be 830,000, which is our purchase price. So no forced depreciation, assuming 3% baseline. Obviously, 2019 to 2022, it was like crazy at 8, 10, 15% in most markets. That's not normal. Historically, it's been around 4%. So I do like a conservative 3% over the long term. And then principal paid on the loan. This is when I would come, just look at the first year. So if you go back to you can build this, of course, too, and build an amortization schedule. But what I'll do here is look at amortization, and I'll just look at the first 12 months or so. So you can see, let's just do this. Let's say it was January. That way you get a full year. Full year would be 5593 plus 527. So roughly 6,000, 6,100. So let's just say it was like 6,100. You plug that in right there. All right, so the total return on investment for the best estimate is only 20%. Not great, honestly. I mean, don't get me wrong. That's better than a 401k still. That's better than a mutual fund, all those things, but it's not worthy of my dollars being invested based on my strict criteria. And if you guys want to be really successful with short-term rentals, you have to stick to hyper strict criteria and stick to those, cash on cash or cash flow targets that you set forth. And that's how you'll be super successful. So this was a quick and dirty version of looking at comps in a market that I've never looked at before, and then understanding where, by looking at the map of those top comps, I need to focus my investment. And then I use those filters on Zillow to find particular properties that would potentially fit the criteria. And then I do a full analysis on them to understand if it's actually going to be worthy to proceed and put in an offer. Now, the only last thing I'll say here is, let's say I love the property, I love the opportunity, and I'm really confident in the high side forecast. What I probably need to do is negotiate a better purchase price. So let's assume it was like, I could just go in at $750, and that was literally the max I'd be willing to do. Of course, I'm gonna have to go back in here and change the mortgage calculator to $750. So 4195. All right. How much does that change my forecast? Not even enough. 12, almost 13%. So it's still not worth it in this case. So honestly, the only way this investment's going to make sense is if the numbers were a little bit higher. And if you're basing it purely off data, this one just wouldn't cut it. If you guys want access to this template and a video explaining how to use it, or a similar version of this template, I should say, I'll drop a link in the description below. It's available for $1. That just covers some marketing costs for me. That includes an ebook and some other stuff. So if you guys want the short-term rental 7-figure bundle, it's down in the description. And let me know what you guys think in the comments. What markets are you guys looking at? I'm going to plan to do more of these types of videos in the future. So if there's a market you have a keen interest on evaluating and you want me to do it here on YouTube, I will 100% look at the suggestions, and I will continue to do that going forward and hopefully give you guys a better understanding of how to become a really good short-term rental investor. If you appreciated this video and how in-depth it was, give me a thumbs up and subscribe to see future videos like it.